Hey everybody, welcome back to the channel. Today we're going to talk about Sofi, and I realized that I have not covered Sofi in a while now. So in today's video, we're going to take a little bit of a deeper dive into the technical analysis of Sofi and how I am seeing Sofi to be positioning in the short to mid-term. Also, we'll look at some couple of analyst rating. We'll do a quick comparison between JPM, Bank of America and Sofi, and we'll take a look at a couple of bullish and bearish cases behind Sofi, and of course we will wrap it up with what I'm doing for Sofi in the short to medium term. So if you end up finding any value today, make sure to give us a like, and without further ado, let's dive in. Sofi has been on absolute tear year to date. The stock is up 90%. It was trading at $4.50 at the start of the year, and at the time of this recording, it is trading at $8.55. So Sofi's market cap is $8 billion. JP Morgan's market cap is $400 billion plus, and Bank of America is $250 billion plus. So just to give you an idea on where does Sofi stack in terms of these two top banks in the United States. Now the short interest on Sofi is also pretty high. It's about 12.9%. It is not really set up for a short squeeze anytime soon, but it is pretty high as opposed to some of these other major banks. So for example, let's take JP Morgan's short interest is 0.66% and Bank of America short interest is 0.67. So what it just gives you that there are a lot more put options open against Sofi as opposed to these other more established banks. Now from a Wall Street perspective, there is currently an on hold rating, 5 strong buys, 1 buy, 8 hold, 1 sell, and 3 strong sell. On an average, the expected price is about $10.44 with a high price target of $16 and low of $3. In the last month and a half, we only had one downgrade from Kaye, Brewitt, and Woods. They downgraded the stock currently because it's going to underperform. They have not listed their price target here, but most of the price targets from JP Morgan, Piper Sandler, Citigroup, Mizuho, etc. ranges between $8 and $15-16, just barring Wedbush that they continue to keep an underperform rating with about $3 as a price target. Going back to the put and call ratio for Sofi, it is important to note that Sofi is a very popular retail investor stock, and what ends up happening when a stock that is very popular among retail investors, you do have a lot of call options as opposed to put options, and that's exactly what you can see right now. The total call and put options is about 0.67, which is very bullish for a stock. However, there's a very interesting data point here on 10/20/2023, which is about 5-6 weeks from today. Put to call ratio is 1.22 with 227,000 put options versus only 186k call options. If you see earlier weeks, it's 0.53, 0.85, 0.51, very bullish, and that just goes to show how bullish this stock is because of the power of the retail investors. Now, one of the potential reasons why we have so many put options open around that 10:20 mark is because right around that time frame, Q3 earnings for Sofi will come out on 10/31, and it is expected that they will have a loss of 9 cents on the EPS, whereas they will have a potential revenue of $515 million for the quarter. However, they did receive 9 downgrades EPS revision, which generally is a sign that institutional investors or traders, they want to hedge their bets right before the earnings. It is with a lot of confidence I'm saying that Sofi is going to beat their Q3 earnings estimate again, is because you can look at their earnings history. They have been beating their revenue estimates since the company went public. They have only missed an EPS once in the beginning. Sofi, as most of you know, is a bank now because it got its banking charter about 2 years ago. Technically, Sofi is an infant in the banking industry and now is like JP Morgan and Bank of America and offers products like them. There's a lot of enthusiasm in retail investors when they start comparing Sofi with a lot of larger banks. And I just want to keep things a little bit in perspective for us to kind of realize that Sofi is an $8 billion market cap company, whereas JP Morgan is $450 billion and Bank of America is $250 billion. So there's a lot of room for Sofi to grow and become a very large player in that sector. And just take a look at the revenue. Sofi brings about $2.4 billion in in revenue for the entire year. JP Morgan brings about $154 billion for the year, and Bank of America brings about $100 billion. So there's a very big gap, and all these companies are very profitable companies in the banking sectors as opposed to SoFi still being in its early stages. So when you are investing in SoFi, you have to realize that it may become the number one choice for banking needs, but that will not come so easily and anytime soon. It's going to take a while. SoFi is a long-term investing play. I would say at least 5 to 10 years. When SoFi's revenue is around the $50 billion mark, that's when you can say it has become a major competition for JP Morgan and Bank of America. Right now, it is still in that regional category of banks and still not a very big competitor for these two big large players. Now that does not mean that I am not bullish on SoFi. I am very bullish on SoFi because companies like Bank of America and JP Morgan are well-established companies. They are not growth companies anymore. SoFi is a growth company, so they have the opportunity to grow to that size, and that's what keeps me very excited about SoFi. Now if you look at the earnings projection of SoFi by analysts, you're looking at a revenue estimate of about $2 billion for 2023. It jumps up to 2.52 for 2024, and then all the way getting into 2032 is when they will be making about $8 billion, close to $8 billion for the year. So as you can see from this estimate, it is going to take a while before SoFi can become a really big threat to these two big banking giants. Now there are a couple other data points that you might want to know. The CTO of the company, who has sold on September 1 a lot of shares, about 53,000 shares, value worth $475,000, and we have not seen any new buying from Anthony Noto, who generally tends to buy stocks. But if you look at all the prices when Anthony Noto bought, it was between 4.5 and 5.5, around $6. So seems like because the stock is above $8.50, I'm assuming that Anthony Noto does not want to deploy his cash to buy stocks at such a higher price point. Maybe once the stock falls further, we may see Anthony Noto buying. Now while doing my research on SoFi, I found a very interesting article on Seeking Alpha, so all the credit goes to the author. The author talks about that how SoFi Bank continues to gain traction and many deposits are coming from the 5 large money centers. He specifically tracks the inflows and outflows of deposits for 25 banks, and since Q1 of 2022, SoFi has gained the 8th largest amount of deposits, which was about $11.58 billion, and on a percentage basis has seen the largest amount of inflows at over 1,000%. And because he tracks all the 25 banks, he also found out that since the close of Q1 of 2022, Bank of America, JPM, and Wells Fargo have seen the largest outflows on dollar basis. So it is expected that there would be a combination of new people coming and getting into SoFi, and also these existing customers from Bank of America, JP Morgan, Citibank, Wells Fargo also leaving their primary banking and moving towards SoFi. So that is a very good sign for SoFi. And the most bearish case that analysts talk about is SoFi is very richly valued. It's not a profitable company. It is a bank, so it should be valued same as Bank of America and JP Morgan Chase. But you also have to understand SoFi is an infant as a bank because it only got its banking charter 2 years ago. So it will take a while before SoFi can grow its revenue to the size of Bank of America or JP Morgan Chase. And as the student loan moratorium has ended and now the student debt repayment is supposed to begin in October. Now there are two schools of thought. One school of thought is saying that once the student loan repayment begins in October, we will see a drastic reduction in the discretionary spending. However, the other school of thought says that now because SoFi has members who have a much higher FICO score and they are in much better position, we may not see a bigger decline in discretionary spending for those group of customers. So we will see how that plays out in the coming months. So based on all the data points that I just talked about and how SoFi is positioned to become a major competitor for JP Morgan and Bank of America in the coming decade or so, how do we position ourselves in getting more of these stocks? Now from a technical standpoint, we had this massive run up right around the mid-May timeframe. The stock was running around 445. It ran up all the way to 1170. And then since we are seeing this decline in the stock price, the stock currently is below its 50-day moving average and is just above its 20-day moving average. We do see the 200-day moving average slowly creeping back up, which is a good sign for the stock. On the Fibonacci, I also see the 807 providing a very good support for the stock. As you can see, almost 9 points have provided a support for the SoFi stock. You will also notice when the stock started running around the mid-May time frame, the average volume was about 44. Prior to that, the average volume of SoFi is between 25-35 million stocks traded. And as the stock started running through these multiple weeks, the average volume continued to be between 75, 85, even touching 90 million at some point in time. And when we had this big earnings on 7/31, we saw this big bump in the volume of almost 200 plus million shares being traded. The average volume right now is about less than 20 million shares traded per day. Now, since the stock has already run up 90% year to date, it begs the question, how much more gas does SoFi have within it to run maybe another 90, 100%? We don't know the answer to that question. And if you are going to be investing in SoFi at these levels, you are most worried, what if SoFi goes down to $6 or $5 or so on and so forth? And it's a very valid concern. And this is why we try to buy stocks using cash secured put. I generally do trading on a weekly basis. However, when it comes to SoFi, you also need to get a good bang for your buck. As we talked about that on 10/20, we have a lot of put options open. So let's take a look at that point in time. So on 10/20, if you are going to be buying a cash secured put at $8, you'll get about 33 cents on the contract, which is $33 for your $800 worth of investment, which in my personal opinion is not worth my time. So I'm actually going to move out and take a look at 15 December. I can get about 54 cents on an investment of $7.05, which means that it gives me a little bit more downward protection in case the stock breaks its support level at 807. My goal would be about 3 or 4 contracts at 7.5. Let me know in the comments what levels are you watching to accumulate more stocks, and I hope you found some value from today's video. If you did, make sure you hit the like, click on subscribe, and ring the bell notification. I will see you next time, investor family, but don't forget to invest for tomorrow.